All right, so you should be taking out this set of notes, income receivables. Just as a quick recap, right? Income receivables it means that this amount has already been earned from the activities of a business. It's already been earned. It's just that have not been received yet. All right, and the amount that is received, right, have not yet been received, right, is called an asset. And the accounting rule is plus minus. Now, how do businesses record income receivable in the journal entries? Because you have already done the work, right? Because you have already done the work, you will record it as a plus income, credit other income. All right? And you are going to receive it. You will receive money in future. And because you will receive money in future, you will debit other income receivable. All right? Now, after that, what happens is that this is at the end of the year. Next year, what happens is that you will need to reverse the account. Everything that you debit, you are going to credit. So instead of plus asset, you are going to minus away the asset. Why minus away the asset? No. Why minus the asset? Why minus away this income receivable asset? No, because at the next year, in the new year, right, you will actually receive the money. So there will be no more receivable anymore. You will receive the money. No, that is last year, but this year at the beginning of the year you have, but you will receive it this year. So no more income receivable. And why at the start of the next year, right? Why do you debit or minus away other income? Why? Because this income was earned when? Was it earned? Yeah, it was earned last year. It was earned last year. So you minus it away from this year's income. All right. Now let's take a look at the first example, just to remind you that it's shown in the current asset as an income receivable. All right. Now, how is this shown in example? Let's take a look at example 4. All right. Let's take a look at example 4. Happy Fish Swimming School provides swimming lesson to children. The year end is 31st December. The business earned a rental income of $300 a month. 1 month is $300, and it earns this rental income. All right, it earns the rental income, $300 a month. All right, now during the year, the business received $3,000 in cash for rental income. All right, at year end, the accountant discovered that some rental income is uncollected. All right, but let's take this step by step first. The very first question they want you to do is to calculate this rental income, all right, that has been earned. I know the answer has been given to you, but I want to ask you, why is it that I took 300 times 12? Why did I times 12? Because 1 year has 12 months. So you assume that you are providing $300 of services every month. So in 1 year, you must take 300 that I provided times 12 equals to 3,006. Okay? Now, at year end, what is the income receivable? What haven't I collected yet? So what I will do is I will take whatever the services that I provided, meaning whatever that I earn but not collected. So what did I earn? I earned 3,600. All right. Then how much did I collect? So let's take a look. I received $3,000 in cash, right? So I must minus away 3,000. All right. So there's a small mistake. Can you please add on? All right. So I must minus away 3,000. And therefore, my income receivable, money that I have not collected yet, is $600. Are you okay with this? Can. All right. What happens when I want to prepare the journal entry to record the following? Firstly, the year-end adjustment. I want to record the year-end adjustment for rental income. So I want to ask first, which value is it? So many numbers here. Which is the number that they are referring to? Is it the 3006? Is it the 3000, or is it the 600? Which one is it referring to? Yes, The year-end adjustment means that you want to record the receivable. All right, and the receivable in this case is $600. All right, so how do you record this receivable? So firstly, what is the date? 31st December, right? Because this is the year-end adjustment. So we ask ourselves, have we earned the income? No. If you haven't earned the income, are you going to plus income or minus income? Are you sure you haven't earned the income? Have you earned the income? Yes, you have earned the income, right? Because you see, you already earned 3,006. It's just that this $600 you have not collected yet. And because you haven't collected, you have earned the income because you times 12, right? So what you are going to do is you are going to record rental income. This one you do already? Yeah, you do already, so you're just checking answer. Rental income plus. So rental income plus will be $600 credit. And then what will you debit? Yes, you will debit rental income receivable. You need to plus a asset of $600. So far so good, correct? Good. Next, rental income that you earn. When you want to record the rental income that you earn, what is one of the account? What do we refer to this type of account as? What is one of the account affected? Of course, and what's the other account? No. Whenever you talk about this word earn, whenever you refer to this word earn, we are always referring this to income summary. We mean we need to transfer to income summary. We are talking about the transferring to income summary. And if I want to transfer to income summary, how much is the amount that I'm going to transfer to income summary? 3,000? Yes, it must be the 3,600. Basically, the $300 times the 12 months. Everything, the services that have been provided. What is the date that you will that you usually transfer to income summary? What's the date? Year end, same, 31st December. All right. And you will record income summary minus. Why minus? Because you're going to transfer out. You're going to take it out, transfer out. So 3,006 debit. Correct. And what is the other account? Income summary. Correct, ma? Because your income, rental income must transfer out first. It must minus first. Income summary transfer out, go, or rather rental income transfer out, transfer to where? Transfer, go into income summary. All right? So, and your income summary is therefore a debit. This one can understand? Do you get correct or you write cash at bank? Yeah, so cannot write cash in at hand. Every time we talk about income that is earned, you need to remember that you are transferring to income summary. Every time they ask for income that is earned, they are asking for the income summary, the closing account, okay? All right, last one. What is the reversal? How do you reverse the rental income receivable on 1st of January? So clearly, the date here will be 2024, January 1st. And which one am I referring to? Am I referring to 3,006 or 600? Yes, you are referring to this in red, 600. Whatever you debit, you must now credit. Whatever you credit, you must now debit. So you will have something like this. You're going to minus away your asset, minus away income receivable. So you credit 600. Why minus away? Because you are because you will collect it. So there will be no more receivable. All right. And then you will debit your rental income. It's minus income because it was earned last year. So far, so good. Yes, Vishnu? No, a receivable. So this is a receivable. Let's go up and take a look. Your receivable is actually an asset. Okay? So a receivable is an asset. It's a real one. It's a real news. Yes, yes, correct. Yes, correct. The second copy, all right? Now, how do you show the statement of financial performance for a rental income? All right, not part of the service revenue fee, but you will record it as part of add other income. You will have rental income. And for this, right, you need to use the income summary number. All right, so the income summary number here will be 3,600. Are you okay with this? Now, rental income is shown after your service fee revenue. Okay? All right. Now, complete the statement of financial position. Spot the mistake here. Yes, it should not be current liabilities. It should be, what should it be? Current asset. All right, it should be a current asset. And what is the name of the current asset? Correct. It is rental income receivable. All right, and this rental income receivable is $600. So far, so good. So you see, I'll be very fast, okay? So if you understand this, then we will go on to example 5. All right, we'll go on to example 5. Now, example 5 has a rental income receivable. Can you add on this word receivable here? There is a rental income receivable. All right, and this rental income receivable has an opening balance and has a closing balance. This rental income receivable has an amount at the beginning of the year and at the end of the year. So we want to ask, whenever we look at this, right, we always want to ask ourselves, when did I earn this income? When did I earn this income? So question, the first $600, when did you earn this income? Did you earn the income in 2024 this year, or did you earn it last year? Think about it. Don't answer me yet. This is a rental income receivable at the beginning of the year. At the beginning of the year, you are telling people, I have $600 that other people owe me. So question, when did you earn this income? This year, 2024, or last year, 2023? This year? This year? This year? This year? No. Actually, you earned it last year. Correct. It is earned last year. You earned it last year, right? You earned it last year. So I'm only asking you, when did you earn it? Now, it's a receivable at the beginning of the year. Means that last year and 31st of December 2023, you are telling people, I have done work $600, but I haven't collected it yet. That's the meaning of receivable, right? Yes, but no, you cannot think like that because it is completely possible. It's possible that on the 1st of January, people owe you money. For example, last year, you already do the work, people haven't paid you back. They already owe you. Yeah, you did the work last year, but they didn't pay you. They owe you the money. So this income was earned last year. All right. So can you jot this down? Work done last year. Work done in 2023. So this you have to take note. All right. Next, at the end of the year, your accounts again show that you have an income receivable. All right. Now, if you're at year end, you have an income receivable, I will ask you on 31st of December 2024, these $400, have you done the work for it? Have you worked? You have worked, right? So if you have done the work for it, you provided the service, have you earned it? You do the work already. Have you earned it? Yes. Work done. Earn already, but not received. All right. You have done the work, but you haven't received the money yet. You're like, Miss Lim, how you know that the person already do the work, right? Because it's a receivable. If you haven't do the work, clearly nobody owe you money. But this question is saying that somebody owe you money. So if somebody owe you money, clearly you have done the work. Yes. If you never do the work and you never receive the money, then don't write lor. Right? You're not very busy, right? No. I mean, it is something that some of us need to process lah. So if you haven't done the work and you haven't received the money, then don't write anything at all. Understand? All right. So during the year, the question also say that the school received 440 check for rental income. So required calculate the rental income. So how that for the year ended? So the earned rental income, how do you calculate it? How do you calculate? Let's start. What do we do first? This 600, what are we going to do? Have we earned it yet? When? Sorry, excuse me. Let me ask it in another way. When did we do the work? Did we do the work in 2024 or we do in 2023? We do in 2023, right? We actually didn't do the work this year. So we cannot say that we did the work. So you must minus $600. Why? Because it was earned in 2023, last year. In 2023. Next, what are you going to do with the $400? Plus, correct. So you're going to plus $400 because you earn this year in 2024. All right? Finally, what are you going to do with the 4,400? Plus, yes, because every time you have a check, every time you receive money, you are going to add income. So, can you calculate this for me? 4,600? All right, so 4,600. Not 4,006. You are goofy. Yeah. I was like, letting her like work it out, and then like, no, doesn't make sense. Minus 600 plus 400 is minus 200. 4,400 minus 200 is 4,200. So who's the goofy? All right, so prepare the journal entries. Now, how do you prepare the journal entries? Have you done this already? Yeah. Okay. You're pretty sure it's wrong. So can you check again? So let's check now. Prepare the beginning of the year reversal. So if a reversal of rental income at the beginning of the year, which value are they referring to? So many numbers, 600, 400, 4,000, blah, blah, blah. Which one are they referring to? 600, right? All right, they are referring to this $600. All right, so what is the double entry date? Is 2024 January 1st. Will you have a receivable this year? No. Yeah, the beginning of the year, you have a receivable, right? Then people are going to pay you, right? So if people are going to pay you, what will you still have a receivable? No, you will not have a receivable anymore. All right, so you are going to take a credit. You're going to minus away the asset. Why? Because people will pay you. So you minus away the asset, $600. Next, we are going to ask ourselves, rental income. When did you earn this income? Do you earn the income this year? The answer is? Yeah. Slap you. Already say here 20 times. $600 was earned last year. $600 was earned last year. This one makes me. Because it was earned last year, you need to minus. So let me say that. minus $600 from your rental income because it was earned last year. So correct or not? You get correct or not? Next, year-end adjustment. This year-end adjustment for rental income, which value are they referring to, ladies and gentlemen? So how many numbers here? Which number are you referring to? 600, 400, 4004, 4002? 4002? Year-end adjustment. 4002? Julian, which is the year-end adjustment? Auntie, uncle, the year-end adjustment is always at the last day of the year. It's always the receivable, the receipt in advance, the expense payable, the prepaid expense. Those are all the year-end adjustment. I know. I will ask you whether you are sure. All right. So the year-end adjustment is 2024 December 31st. Right? Now, a year-end adjustment for rental income, you have already earned the income. So since you have already earned the income, you should credit the income. Why minus? You earn. So you plus income because earn. You have earned it. So you will credit 400. What do you debit? What do you debit? While you are thinking, I will plug in my. What do you debit? Oh, it's okay. Anything go missing? No. What do you debit? This is not income summary, you know. Income summary, yeah. Income summary is earn. The word for income summary, you must see the word earn, right? So this one is rental income. Receivable. You must plus an asset because not receive. You will receive an asset in the future. All right? Yeah. Rental income earned for the year, ladies and gentlemen. This how much is this? 4200. Yes, Jiaqing, you got it right. This is the one that you need to close to income summary. Good job, you. All right. So how do you close to income summary? Wait, what date is it first? 31st, always year end. Close to income summary is year end. Then, what are the two accounts affected? Rental income debits or credits? Debit, yes, because it's minus, you need to transfer to income summary. All right, you need to transfer this to income summary, and the amount here should be, yes, 4200. All right, and therefore the credited amount should be, the credited account should be income summary. All right, are we done? It seems like we are. So, ladies and gentlemen, this is the end. This is the end of this period. Okay, goodbye, everybody.